I wanted to take a challenge for you traders because a lot of beginners come to me and they always have this 1K, 5K, 10K account. And I wanted to share with you what are the process, the setup, the mindset that I use to, well, I failed, but I wanted to go for 100% in 5 trading days. I failed because I took 6 days to make 200%. You will see the results also of my brokerage. So the first pattern that I use, and it's only the only pattern that I use, is a gap and extension. So a pop and fail on small caps during the news at the open for a fail. This generally is also a stock with dilution, heavy back holders, and also we can have a high volatility and so like high liquidity. The second thing is the mindset, which is a fundamental concept when you're looking to build your account. And really, traders don't focus only on simply the technicals, but the mindset. So control the ego, the emotions, control also of your trailing when you're trading. Every morning, I screen share a rising grind. So 9 o'clock, you can see me trading live, and I will take this trade just in front of you. So you can subscribe, click the link, and see you there. The biggest challenge of a trader is to build a small account into a 7-figure, $1 million account. Everybody wants to do this. There are so many fake outs out there, so be aware. This is instead a real strategy that simply worked so good for the account of my wife. Well, in the beginning, you have to remember that, one, you have to be very prepared. So you don't have to be simply a trader. You have to be very skilled in the strategy that you're using, and you have to be aware of the risk that there is in order to make this kind of performance. You can see that the volume that we traded was high. So we traded 1.8 million of volume. That is a huge amount of shares in about 7 trading days. The opening account balance was 6,000. The current balance is 16,000. So we made 10K. That's around 200% return in 7 trading days. And the net P&L, including fees, is around 9.8. Also, if you look at the risk settings, max loss right now is 1.5K. Before was 200, then we increased to 300, 500, and so on. So this has to be gradual. Also, you will see that the max position exposure is 50K. Why? Because in order to have this kind of return, which is not a normal return, 1 or 2% or 3% growth a day, but was a very important percentage return in about 1 week, we had to use a lot of leverage. And you can do this only if you're skilled, only if you know the strategy very, very good. The most important thing is the mindset. The mindset of a trader. This is what really made a difference, because it's important to know a strategy, but if you don't have these skills, then you won't simply be successful. And when I say mindset, it means all these contents over here: dedication, ego, executing your plan, confidence, discipline, personality, consistency, and detachment from the money. So we had to put years of experience, of trading, of knowledge that we give to our mentoring students in this account challenge. So I invite you to read this mindset on my blog. Now, what about the key strategy that helped me to build the account? Here we have an example of the typical stock that we traded. Small cap, both long and short, and we were using small caps with high volume, so you want to see always liquid, with also, I would say, a news catalyst. KTTA is a gap on the 26th of September. We started looking at the stats of the company, market cap 4 million, float, not a float, so less than even 1 million. And this is very dangerous if you want to short, because I always say to traders, high volume, nano float is a beautiful long, especially if you have a catalyst of a cancer. So we knew that the first part of the morning, this was going to be a long, ideally with an EMA. And we can see over here with a 5-minute chart, we start looking to longs when we had a first dip into the 9 EMA. In that moment, very early, I was screen sharing in the room and explaining to traders how I would have approached the plan on KTA. But we know that when everybody is long, so the entire market is long, we often have liquidity traps, because a lot of these stocks are simply stocks with low cash and dilution
Doesn't mean necessarily it has to have dilution, but they tend to have like liquidity traps. So levels where the smart money will trap the long traders, the breakout traders. And this was exactly happening over here at the gate. So this is the moment, for example, that we went from a long bias to a short bias. This is the plan of the 26th. This is the Italian time, even over here in Denver. 5 minutes before the open, I was screen sharing, was explaining to the traders. The first plan, open near the pre-market high, use a gap and extension to short the liquidity trap fake out. Exactly what happened. The system gives me gap and extension. The two arrows come. We have the short, and when this short was alerted, we all took the trade for this unwind. This is how we were executing it. This is also the screenshot we put while we were trading this live. And here you can see the execution. So we start very, very small, a feeler, and then you can see that this is exploded upside. So in this moment, we are still like 10% because we shorted the 90 MA. This is an error that personally I would say to traders avoid. If it dips 90 MA and it pushes, then take the long or simply avoid trading the short. Once you're far, and you can see that over here we stopped. So we saw a big selling pressure. We started like shorting over here, adding more size, and then covering into the famous Jalen's and VWAP. So we were risking 760 with an average around 735. We covered into the 685. And then we were short 730. You can see all the ads again and covering the dips. Add again over here, risking 750, 760, and covering dips, and so on. So we tend to simply recycle the shares. This was the 26th. So you can see the bars that we took, KTTA. We took around 6,000 shares, actually 7,000 shares. And you can see that for a small account, at that time, the 26th, the account was already around 10,000. So we were already around 100% plus on the return. We started taking more size. So in the first day, we were trading like 2, 3, 4, 500 shares, 1,000 shares. And then we went to 4, 5, even 7,000 shares in order to have that, I would say, bigger returns. This is my final advice. So whoever tells you that they have a great system, but they cannot prove it with backtest the statistics, then you cannot trust them. So what it means that before taking a stock like KTTA, I simply backtested that stock and other stocks with the same parameters, with the same gap, with the same volume per market, and I want to see the stats. What the stats were giving me? Well, we had from the start of the year around 146 gappers, and 74% almost were faders on day one. This means that they faded on a day one. Therefore, what it means that if I'm longing, I'm against an edge. So always refer to the statistics and always trade then the momentum, the strategy that we have, so you can use our template and trade together with us in the trading room. Now, this trader was a small lesson in order to tell you what we've been doing. And every day we're going to look to trade the account live. I will pass the account probably soon to my wife because I'm teaching traders, I'm mentoring traders, and this is my primary goal, to form traders and make them become full-time and professional. Again, if you want to also join the room, remember we have different plans, chat room or private mentoring if you want to be followed by me. And also another thing, remember Grind50 is the coupon code that I will give you for a 50% discount for the first month. Good luck.